Hello, welcome to the Ashworth Wealth Weekly Market Update. First time in a couple of years that we get to talk about something other than rate increases or the Fed holding rates steady. As anticipated, the Fed this week, or this past week, I guess I should say, did cut rates. What was surprising is the amount that they cut. It was widely expected that they would do a 25 basis point cut, which is pretty typical when the economy is doing well, but it's time to cut rates. They call this an easing cycle, quantitative easing. The Fed, for a variety of reasons that they've explained, decided to do a 50 basis point cut. This was a surprise to most of us because all of the economic indicators are pretty strong. So it has left investors wondering what this means for markets and for the economy. If you take a look at this chart that is listed here, this is a chart showing real retail sales momentum at the start of an easing cycle that the Fed appears to be starting right now. So if we go back and take a look at when they have had jumbo cuts or 50 basis point cuts like what we have just seen, typically that is done when they feel the need to jumpstart the economy, like in 05, 07, in 01 and 07. They had regular cuts in 05 and in 2019. If you take a look at the green bar under September 24th, real retail sales in particular is still very strong. This is from the August report. Other economic indicators also show economic strength. So it was a little bit odd that the Fed chose to do a 50 basis point reduction. The Fed, on its part, came out and said that they did the 50 basis point reduction not because of any imminent threat to the economy, but because they felt that that was going to be the best way to get the rates more back in line. So what we're looking for moving forward is smaller rate cuts. We would not anticipate another 50 basis point cut in the next. And it doesn't sound like the Fed is interested in doing that either. I think it will be relatively gradual from here on out. But 50 basis points is a nice cut. The stock market definitely applauded it as we have hit all-time highs again here in the past week. So I guess the long and the short of it is the economy does appear to be doing quite well. There were some red flags that came off over the summer, but those things appear to have been resolved, and the economy does feel like it's doing pretty well. So overall, the Fed felt that a 50 basis point reduction was the best way to go into this period of quantitative easing. We would anticipate continued rate cuts over the next 6 months to a year, but probably not along this magnitude. So hopefully the stock market continues to cheer the rate cuts in the way that the economy has responded to the Fed's job over the past couple of years, and will continue moving forward. Either way, and I know I say this every single week, but the most important thing is to make sure that we stay invested in appropriate investments for your risk tolerance, and that we make sure that your investments follow the plan that we have built for each of you. So if you'd like to review your plan, have any questions, please feel free to let us know. And as always, feel free to pass this information along to anybody. Thank you for taking the time to listen for a few minutes this week. Let us know if you have any questions, and I'm sure we'll be in touch soon. Have a great day.